Welcome to my YouTube channel where we talk about investing into the stock market. A lot of stuff happening in this earnings season. Thought I'd follow up. I did make some moves out in the market. But today I want to talk about SOFI, and I'll briefly talk about Palantir very slightly, but mostly the video is going to be about SOFI. I know I've been putting out quite a few videos on SOFI, and perhaps a lot of the shareholder base maybe not liking the message that I've been putting out there on my personal analysis when it comes to price action. I've been pretty much saying that for the majority of the rest of this year, I think that SoFi is going to be trading flat, if you will, into the sevens or whatnot, and that's pretty much what's been happening. Now, um, maybe perhaps that's bearish sentiment on the price or the stock price, but I am bullish on SoFi, and I have to say that I reviewed the earnings. I've listened to the conference call. I looked at the slide deck, so forth. I'm impressed. Some of my thesis is changing as far as the macro lens for SoFi and so forth. You see, in my prior videos, I put out Q3 probable to have some employment turbulence. Okay. Um, I want to briefly talk about a little bit of that and how I saw SoFi. But let's get into this earnings. I'm going to briefly summarize it because I think a lot of the shareholders out there probably saw a lot of the other YouTubers go over the earnings or what have you. And I want to talk about that as well too. But let's pull up the slide real quick. Everything looks good. Member count is growing, products growing, the tech platform. This is something that I've had my eye on. We're seeing consistent growth in this tech platform, and that to me, and actually we're seeing a reacceleration in the tech platform. 10%, 11%, 20% quarter over quarter. All right. Um, Financial service products and lending, it's all going up. Everything is a nice steady incline. All right. An investor's dream of a chart to look at, to tell you the truth. As a growth investor, you see a lot of these targets and a lot of these, every time they do a quarterly earnings, it's like it's up here, it's down there, and now it's up here. No. The underlying presentation and the actual gradual progress made quarter after quarter with SoFi is pretty apparent. It's a steady incline, if you will, and you get to see improvement, quarter after quarter, year after year improvement within the charts. So I like that about SoFi and that actual business model for growth projections and so forth. You're gonna have saw a little quarterly decline on some EBITDA and net revenue. If you take a little hit on your growth rate, um, if you take a little hit on your growth rate, there's going to be some decline somewhere. Okay, so they're profitable. It's not like we're losing money, so whatever. I want to talk about the actual. I want to talk about the actual guidance that was put out and what's going on with the street. All right. So, um, essentially, SoFi, they just reported their Q1, right, for 2024. And prior guidance on Q4 of 2023, they guided for 14 to 16% annual revenue growth and 2.3 to 2.4 ish billion dollars in net revenue. All right. They updated the guidance. They actually raised the annual guidance, like at the end of year, okay, from 15 to 17%, and from a little over 2 point or little less than 2.4 to a little over 2.4. It's still it's still a raise, okay, and we're only in Q1. All right, so. And yeah, the EBITDA, adjusted EBITDA, they're raising that guidance too slightly. Not enough on a percentage basis, but enough in a monetary basis to notice. And actual GAAP net income is going up too. So GAAP net income, diluted EPS, tangible book value, they're raising guidance for it all. All right. So from what I take from the conference call, and hey, if you've been watching me, I've been worried about, I'm talking loan leveraging, the consumer employment, the health of the consumer, and that's kind of been my whole thing with SOFI. All right. Now, this conference call changed something. Okay. Um, they've acknowledged they've acknowledged the rate cuts. All right. Maybe 1 to 2 or none. All right. They're acknowledging that. All right. They are shifting their risk. All right. They were going real hard into lending. Now they're going to start focusing more on they're still going to do loans and lending and grow there, but they're going to be more conservative about it. All right. They're going to be a little more picky. They'll probably be a little more picky on who they loan to and so forth. And we'll still see some, loans go out and get some growth there. But they're focusing a lot more and shifting into this Galileo account and the actual tech platform portion, all right, which I'm okay with. So overall, great earnings. I like the guidance. Why is the stock down? Why did we see about 10.5 decline in one day? All right, I'll tell you why. Because the street had expectations for Q2, which SOFI never had those expectations. And the way that there is a little volatility shift in the business model with actual principal and interest payments and how that all works out with the leveraging. Let's say a little bit less, a little bit soft Q2 is what on the guidance. However, there'll be a rebound towards the end of the year to surpass their original guidance, if you will. All right. So how can I explain it again? So Q4 of 2023, that was the guidance, 14 to 16% revenue growth. All right. Q1 happens. Remember, they're in Q2 right now, so they see what's going on in Q2. So they're guiding softer than the street would have projected. And Wall Street, they're all about a few months, 3 to 6 months out. They don't, they're short term. A lot of them are traders. They want, there's a whole thing there. All right. They're not long-term investors, so to say. All right. They're more concerned about preservation of clients keeping the money in the investment accounts. They're not concerned about making money for their clients. All right. Yeah, a little shot at the suits. So, I got news for you. When a lot of investors were disappointed that Noto was not enthusiastic to try to pump up to the street. I tell you what, the street doesn't control the operational tempo of this business. Anthony Noto does. All right. And, they're going to do what they got to do for the long term, for the shareholders, for the long-term health of the company. And, I'm impressed. All right. There's a lot of investors out there, a lot of retail that have bought short-term options on this thing. And I can understand, maybe it would pop or whatever. But I think that's the wrong way to go, and it's not financial advice. In prior videos, I pretty much stated what the strategy is to win. All right. It's pretty simple to me. This is how I believe that, I'm going to be able to win with SOFI. You just buy shares straight up. When it dips, you accumulate, you just buy it because you don't know what the street's going to do. It's a manipulated stock. All right. There are performance-based units in which the CEO will get rewarded. And then you have the street, which has a conflicting biases against SOFI and Noto to try to discourage him. All right. So once again, how do you win? Well, I'll tell you what I did. Well, let me see here. Well, that's another thing. All right, I'll talk about that. But oh no, where is it? Let me see here. Okay, here we go. Here we go. Sorry, bear with me. All right, I bought more SoFi. Okay, um, not a whole bunch. Just bought another 100 shares today on the dip at $7.04. Okay, and then I'm gonna gradually build this position up. We'll pull up my portfolio because in keeping with transparency in the channel, this is what we're doing. All right. Um, I want to get cost basis down a little more, maybe into the sevens, and I'm not happy with the amount I have in the position. All right, and the cost basis. I don't know about doubling to 20 G's cost basis or invested capital, but maybe I can see getting share count up to 2,000, get a couple thousand shares, and getting cost basis down into the sevens. Okay, you see that I had, if you've been following along, I had some Palantir covered calls that I sold. Um, I pretty much booked the win. Let me pull that up real quick. I pretty much filled those. I bought to close them, um, and I made some pretty good money on the calls. So I think I made like $1,400. All right, cost basis against uh, cost on yield is probably around maybe 11% ish. So I made the stock yield 11 ish. I was right. I was right on the bearish price action sentiment from Wall Street. I was right that they were probably going to send the stock down, and they did. And I did a hedge. I did a little hedge. It worked. It paid off. And I had another reason. I owed Uncle Sam some money, so I cut Uncle Sam a check. It served its purpose. I closed it out. I collected the premium, and I get to keep my shares. I'm happy. And if you want to get real technical, I even lowered cost basis on my shares even more slightly. All right. So that's that. So that covered call is out. All right. Going back to the portfolio, I plan on consolidating, and I'll probably put another video out there. We got PayPal earnings tomorrow. I guess technically I'm a shareholder in the sense that I control shares, but I don't own shares straight up of PayPal. All right. But I do plan on doing some consolidation with this portfolio. Navitas, I'm just going to be gradually buying here and there on dips. Not in too much of a rush. There's plenty of time. This thing will probably go back down. And SoFi could go down to the sixes. But you know what? After this earnings and the guidance that they put out to that soft Q2, but the reassurance in the reacceleration of or upping the end of year guidance, I think that they would know that, I like their pivot for more conservative, operational conservativeness. They have liquidity because they raise capital. They fix some short term what you call on the balance sheet. How do you say? We'll go to the balance sheet. I guess this is quarterly. Not everything's up to date, but yeah, I mean they got cash. They got enough liquidity to withstand some turbulence. Okay. And with the way that they're shifting their operational safety, I'm feeling good about it. They're acknowledging there's not going to be like 5 rate cuts this year or whatever. So, I'm feeling bullish on SoFi. I am bullish. I assess that we're getting great value here. I think the stock's probably worth $10, $11 right now, but the street ain't giving it respect. And that's just how it works, and that's where the alpha is. Okay. With that being said, hey, that's what I have to say about SoFi. I'm starting to shift bullish more. I had a hold rating for myself. I had a hold rating on the stock. Now I'm having a buy rating. I'm going to start buying the stock. and I'm not gonna go crazy heavy, but I'm gonna 100 shares here, a couple hundred shares there, whatever. All right. But to all my SoFi shareholders out there, SoFi Nation, you know, stay strong. This is what investing is about. Don't lose, yeah, don't lose faith. Keep the faith. All right. So hey, um, I hope you all enjoyed this video. If you got value, subscribe. If you're a SoFi shareholder, subscribe. And I hope you all have a good rest of y'all's week.